All right. Hey, everybody. It's Brad, and we're here for another ES chart review. This is for January 31st, 2023. And as always, we're going to be looking at the day through the ICT theory. How did it play out? Where I went wrong? Where I need to learn more? I'm by no means an expert at the theory, still very much a student. If you want to learn more about it, definitely go look him up if you haven't already. The Inner Circle Trader. I'll put his Twitter and his YouTube in the description. And if you would like to join us to chat about, what you're seeing and what you believe could work throughout the trading day, feel free to join our Discord. I'll also put the link to that. We have a couple people in there, and we're trying to learn. It's a great opportunity that we have this year to learn this theory. Anyway, let's get right into it with the daily. So I'm just going to lay out my daily bias that I had. Yesterday was this red candle, right? And we ended up closing a gap that happened from Thursday daily candle, last Thursday. We can mark this down. Right, so we had that gap, we closed it up. We have some gaps below. So a potential was that we go back there, maybe to the midpoint of this wick, the consequence encroachment, as ICT calls it, or we go back down to the gap to come back up. Another thing to keep in mind, tomorrow is FOMC day. This is a very important piece of data that comes out, and then there's also a speech, I believe, from the Fed. So a lot of people are holding off until then to see what happens, right? So sort of expecting a maybe choppier, more manipulated day, and thinking, we'll probably just barcode a little bit on the daily. But initially, I just wanted to see where the 8:30 was going to go, 8:30 candle, and the 9:30 candle, and see if we're going to have one of those false moves, and then the real move shows in the opposite direction. Ended up not working out as I planned, and I'll get right into that. But let's get in these gaps closed up or deleted, and we'll jump into the 15-minute. All right, so starting out, let's look at the 8:30 candle, right? 8:30 candle, and actually I'm going to jump into the 1 minute because I really want to show you how difficult the morning was to trade. Looking at the 15-minute, we'll get there, because when you look at it, it smooths it out a little bit. It makes it look like it was a slow but trendy day, which it turned out to sort of be. But when you're in there live and you see things like this 8:30 candle, boom, shot up. I'm looking at this high over here, this swing high from 3:18 a.m. and thinking, okay, it's just on a huge buy side run, and we're gonna take sell side next, or this is prepping for a rundown. That ended up being false, and I believe why is because there was a Canadian data that came out. The GDP data came out in Canada. So that triggered that reaction. So at that point, I sort of threw the idea that candle was going to show me anything. I sort of threw it out the window. But you'll come to see I didn't really. My head at that candle, and I saw that swing high taken, my head switched to, bearish bias. We're going down to hit that gap below on the daily, and then we'll probably come back up tomorrow throughout the night tonight, tomorrow morning, come back up, and just, little consolidation before FOMC. Still need to work on this psychologically. I always talk about taking your bias, throwing out the window as soon as the market shows you something different. I talk about it a lot because it's something I struggle with. So got to get better with that. Just another example. So keep a journal, live and learn, move on, and be better. That would be my advice to myself, and maybe some of you watching if you had the same issue as me. So let's get into a couple key points here. Morning was a little choppy mess. The 8:35 candle, there were a couple things I was looking out for. On the 1 minute, the 8:35 candle. Oops. We have a gap, right? So I had that drawn out, and I was looking at that. Now, as this move continues up and does all this stuff, I was thinking, well, if I could get in on a long with a nice entry, I'll take it. Ended up not being convincing enough for me. And I'll go through a couple points to show why. 1 minute there. I was also looking at the 15-minute. We have this huge gap from 8:30, right? So let's draw that out. Make sure you make your templates, people. And I like to have the consequence encroachment on gaps I draw out, because that's often a reaction point. And then you see the 15-minute and you go, wow, look at that. Isn't that interesting? The body's respected, right? But when you get in there on the 1 minute, I have to scroll back here. Let me show you what screwed me up this morning. All right. There was a candle at 10:09. I'm looking through my notes here. 10:09, right? Right here. This is choppy. I wasn't loving it. Kept coming back and hitting this. Did consider, okay, should I take a long? But just nothing was enough for me. Until this, 10:09. And I saw this big red candle pierce through the CE here on the 15-minute and break this part here, which was still part of the move, right? Break this low. In hindsight, it's not enough. That's not enough at all. That's showing respect to that 15-minute gap there. But, like I said, I let my bias from this candle thinking, oh, we're going to have a bearish day. I just let it dominate my mind a little bit. So something to work on. This is a 1 minute gap. So this gap, we came back in, and I actually went short right when we came back in. And as soon as we closed the gap, I got out. I was like, okay, that's not working out, right? Yeah, so that was one of the mistakes I made. Didn't pan out, but you saw this a lot in these choppy waves here. You see a gap here, you see a gap there. You can, especially this one, look at this. We come down and we don't take lows. I mean, there are things, there definitely are things that you can find that would dissuade you from joining the play. But, you stab up on the gap. You might think, wow, that's great. That's a great short opportunity. I'm going to get in real early. We broke a swing low in this gap, stabbed up in it. We're heading down. Wow. Great put opportunity, or put or short or whatever you're playing opportunity. I'm going to go all the way to this low. Just be careful. All right. Look at the higher time frames when things are a little choppy. I just need to beat that into my head to check the higher time frames. But let's move on to the next thing. At the 11:10 candle, let's find that here. 11:10 candle. I tried it again. And that gap was closed up once again, and I ended up getting out of the trade because I was nervous. So, yeah, another thing that I was just hoping, right? And it's a bad place to get in. So, live and learn. We have another play on the 1326 candle. And you'll notice the theme. You'll notice a theme here. It's my bias, right? So we have another gap. We have another stab and push down into that gap. I go short. I say, hey, this is the afternoon move. Great, we got it. Swing low, broke. Beautiful. Just didn't look at the higher time frames and trust that the trend was going to continue on. So once again, another of the same thing. And don't worry, I'll get to the higher time frames and you'll see how silly I was and going in short in all these places. I did take a couple longs throughout here. I believe on that last one, once it closed up and we had a little entry condition long, I closed out, went long, got a couple little gains here and there, but definitely should have noticed a couple more things here. The last thing, now ICT did not call this a Judas swing. I know it's a terminology that he uses for certain time frames, and I think Forex mainly, for like Asian close, London open, something like that. I'm not exactly sure on the Forex part because I don't watch those videos as much. Guess I should. But to me, this looks like a Judas swing. All right. We have a slow, steady climb up, making new highs. We pierce it, make a new high, drop down hard, and we break this swing low. Now, the the killer today was that this was, I was watching it just piddle around and keep going up and up and up, and I had a target up here somewhere. I forget exactly where it was. Should be in my chart prep from this morning. I see this gap right here from the 1501 candle. We come back into the gap and we start going up. I actually went long there. I actually decided, okay, that's enough for me. I think we're going to the target. I'm going to go long. And that's when the Judas swing kicked in. And I guess this is just something to note. 3 o'clock, 3:15, around that time. Wait for the move, right? There's going to be an end of day move. Be a little more patient and look for the obvious thing, right? So we actually broke down, and I said to myself, it's finally happening. This was the breakdown. We're going to come back down and make a balanced price. We're so up high right now. We're going to balance today out here. So I went short right here, right on this stab up. I thought there was a gap. Oh, there was a gap right there. 1517 candle. It came up into it. It came up through it. But to me, it came up to the order block, right? And then this candle sort of confirmed that when it came back down. I thought, brilliant play, going short. We're hitting a home run right now. Dumb move. Once again, we came down. We actually took these equal lows here, right? Draw a line out. I actually saw it when that happened. I looked over and said, wow, equal lows. Maybe you should get out. This was the time I decided to trust my gut and, go for the big play, and it ended up burning me, right? So, broke the swing high and came up, stopped me out, and ended up being what I feel like is a Judas swing here. Feels like it matches. And one thing about it that I realized in hindsight, was blinded by my position at the time. Look at that. The move up after this manipulation, the fake move, take a swing low or equal lows, move up, breaking the old high, creates a fair value gap. Trade back into it, rocket off to the high of the day. Took all my targets that I had lined up. I had 3 targets lined up here. Took them all out. And I didn't join. So, definitely a tuition day. I'm glad I kept a journal. I need to be a little more detailed still in the journal. Getting a little caught up with the chat and not journaling properly. But yeah, I wanted to point that out. I think this is a Judas swing. Whatever you want to call it. It is an end of the day run manipulation phase to get people like me today to buy in that, oh, this is our high. We're reversing now. Trap them down there and eat their lunch, right? So I'm going to focus more on improving and learning. I hope everyone can join me on that journey. If you would like to be a part of the community and help us all learn together throughout this next year, please check the Discord link in the description. And as always, go learn from ICT. I'm doing this to reflect on the day and hopefully give you guys some perspective and reassurance that you're not the only one that's screwing us up, right? I have great plays and I have terrible plays and I miss a lot. It's very hard. It's a hard theory to learn, but if you can get it down, if you can keep practicing and trying and studying and use this great opportunity that we have this year, it really can change your life. I mean, I believe it can change your life. So keep at it. Join us in the community. Always free. We'll never charge. It's for learning. And we're learning from ICT. And we're not learning from me. All right. I'm just trying to help create a free place for people to talk about this stuff. All right. So I hope you enjoyed the video. Like, comment, or subscribe, all that nonsense. Have a good day. Have a good night. See you tomorrow. FOMC. Bye-bye.